In the summer of 1929, America was the most prosperous nation on earth. Stock markets were soaring, factories were roaring, and ordinary Americans believed the good times would never end. But somewhere in the American heartland, a series of decisions made in dusty fields and small-town banks were quietly building the fuse for the greatest financial explosion in history. This is the story of how one farmer's fateful mistake triggered a catastrophe that would destroy the savings of millions, collapse over 9,000 banks, and plunge 12 million Americans into poverty. To understand how it happened, we need to travel back to the end of World War I. When American soldiers came home from the trenches of Europe, they returned to a nation hungry for food, hungry for goods, and hungry for growth. The American government, eager to feed a war-torn world, made a dramatic announcement that would change American farming forever. They told farmers across the nation, "Plant every acre you have. America needs wheat, and Europe will buy every bushel you grow." And the farmers listened. Across the Great Plains, from Kansas to Oklahoma to Texas, millions of native grasslands were torn up and converted into wheat fields. Banks, sensing an opportunity, began offering farmers cheap loans to buy more land and more equipment. It seemed like a perfect system. Everyone was winning, and nobody asked what would happen if it all went wrong. By the mid-1920s, American farmers were producing more wheat than the entire world could consume. Warehouses were bursting, grain elevators were full of capacity, and the price of wheat began to fall. But the farmers didn't stop planting because the banks were still offering loans and everyone believed the market would recover. Then, Europe, slowly rebuilding after the war, began producing its own food again. American wheat exports collapsed almost overnight. The price of wheat dropped from over $2 a bushel to less than 50 cents, an economic catastrophe for every farming family in America. Farmers who had borrowed heavily from banks to expand their operations suddenly couldn't repay their loans. Foreclosures began sweeping across the American countryside like a wildfire. Small rural banks, which had loaned millions to farmers, now found themselves holding worthless debt. When word spread that the banks were in trouble, ordinary people began lining up to withdraw their savings. This was called a bank run, and once it started, nothing could stop it. Banks didn't keep all their customers' money in the vault. They had loaned most of it out. So when thousands of people showed up demanding their money at the same time, the banks simply didn't have it. Between 1930 and 1933, over 9,000 American banks failed, wiping out the life savings of millions of ordinary citizens. Businesses that depended on bank loans to operate suddenly had no credit. Factories shut down, stores closed, workers were fired by the millions. The stock market, already teetering from years of speculative excess, finally cracked under the pressure. On October 29, 1929, a day that would become known as Black Tuesday, the market lost $14 billion in a single day. In today's money, that single-day loss would equal over $250 billion, gone in hours. The Great Depression had officially begun, and at its root was a story that started not on Wall Street, but in the wheat fields of the American heartland. But the worst was still to come. Remember those millions of native grasslands that farmers had torn up to plant wheat? Those native grasses had deep roots that held the soil together for thousands of years. When farmers plowed them under and planted shallow-rooted wheat, they unknowingly destroyed the only thing standing between the Great Plains and catastrophe. When the wheat crops failed and the fields were left bare, there was nothing left to hold the soil down. And then the winds came. Beginning in 1931, massive dust storms called black blizzards began rolling across the Great Plains with terrifying force. These storms were so massive they blotted out the sun for days, burying farms under drifts of dust as deep as a two-story house. Children developed a fatal lung disease called dust pneumonia from breathing the thick clouds of airborne soil. Over 7,000 people died directly from dust-related illnesses during the 1930s. By 1934, the Dust Bowl had destroyed over 100 million acres of American farmland, an area larger than the entire state of California. Over 3.5 million people were forced to abandon their homes and farms, becoming refugees in their own country. They packed everything they owned onto trucks and cars and headed west to California, hoping to find work as agricultural laborers. But California didn't want them. They were called Okies and Dust Bowlers, and they were met with hostility, discrimination, and more poverty. At the peak of the Depression, 1 in 4 Americans, 25% of the entire workforce, was unemployed. Soup kitchens and bread lines became part of everyday American life, scenes that would have been unimaginable just 5 years ago. The richest nation on earth had been brought to its knees, and a chain of events that began with a farmer planting too much wheat had helped trigger it all. But the farmers didn't create the Great Depression alone. They had plenty of help from the people in charge. President Herbert Hoover, a man who had been celebrated as a genius of American industry, made a series of catastrophic decisions that turned a recession into a full-scale depression. In 1930, Hoover signed the Smoot-Hawley Tariff Act, one of the most economically destructive pieces of legislation in American history. This law raised taxes on over 20,000 imported goods to record levels, and other countries immediately retaliated by doing the same to American exports. American exports collapsed by 61% in just 2 years, destroying what little economic activity remained. The Federal Reserve, America's central bank, then made its own devastating mistake. It raised interest rates during the worst economic crisis in history. It was like throwing water on a drowning man. Policy mistake after policy mistake accelerated the collapse. It wasn't until 1933, when Franklin Roosevelt entered the White House, that America began to find a way out. Roosevelt's New Deal, a sweeping series of government programs, put millions back to work building roads, dams, bridges, and national parks. And critically, Roosevelt created the FDIC, the Federal Deposit Insurance Corporation, that guaranteed that Americans would never again lose their savings if a bank failed. That single institution, born directly from the trauma of 9,000 bank failures, still protects your money today. So, what can we learn from the greatest financial disaster in American history? First, overproduction is as dangerous as underproduction. When governments encourage maximum production without planning for what happens when demand falls, ordinary people pay the price. Second, debt amplifies everything. The farmers' loans turned a price drop into a foreclosure crisis, which turned a banking problem into a national catastrophe. And third, policy responses during a crisis can either save nations or destroy them. The difference between the Smoot-Hawley Tariff and the New Deal was the difference between collapse and recovery. And finally, the land itself is not infinite. The Dust Bowl was not just an economic disaster, it was an environmental catastrophe caused by human greed, government encouragement, and the belief that nature had no limits. The next time you hear a government or a bank tell you that the good times will last forever, remember the wheat fields of the American heartland and the price that was paid when nobody listened to the warning signs. Don't forget to like, share, and subscribe to Nadir Finance History for more incredible money stories.